now I'm going to bring Arnaud in because Arnaud's going to tell us whether or not the wave structure that he's looking at is saying anything about believe we made new highs in the S&Ps. Welcome
Mhm.
back, Arnaud. Welcome back.
Thank you. Thank you, Dale. Thank you for having me.
Good to have you. So
Yes.
you want to share your screen and tell us what you're seeing here? My memory
Yep.
and what we talked about last time. I know you were in the 6,800 camp. Was that correct?
That's correct, right? I just pulled it up. As you say, you're only as good as your last trade.
Yeah.
So this is from July 31st, and it
Oh,
says
nice.
I was looking for 6,800, and I think we got to
Great call.
67, 64, something like that.
Yeah.
So that was July, so that was not too bad. And then, of course, October 10 happened, and there was quite a steep drop. I think one of the steepest one-day drops we've seen since April.
Yeah.
Yeah, so in that sense, everything is intermediate to long-term still on track, which is always what I prefer to focus on. Let me quickly update this little chart for you because sometimes stock charts messes the numbers up a little bit. It's all there. It's like my tax return. All the numbers are there, just not necessarily in the right order, right?
Yeah.
So anyway, so we're looking here for a fourth wave, a pullback here in green, and then to be followed by a final fifth wave before we would see a much larger pullback. So I'm counting the waves since the March 2020 low, the COVID low as we call it, the COVID-19 low, and so far I think everybody can see we've not done five waves up, and we must see essentially five waves up is such a large structure as markets tend to trend longer term upwards in impulse fashions and correct in three waves down. So impulses are five waves. And we haven't seen it yet. So we have a one here in 2021, a two in 2022, and then all the way up now, we're in this wave of three, which is subdividing in most likely in ABC. That means that we're dealing with a diagonal structure to be more in detail, but it still means that we're now in a C wave before we see a larger pullback. And we are now in this target zone for this third wave. So it's becoming a little, of course, from an intermediate to long-term perspective, a little bit more hazardous for this fourth wave, which can be similar to 2022, which was not a fun year to be in. But we expect it to last a little bit longer, this rally, somewhere into, I would say, spring of next year. I have that as a, here it's called the Armstrong Pi turn date.
Yeah.
And
That's interesting. I've interviewed Martin. So
okay,
as I think it's the
interesting.
first time I've seen you use his pi dates. Um,
Yeah, probably on the show. I've definitely used it for my premium members, and
okay.
it's pretty accurate, I must say. So here I've dug in. This is nothing secret or proprietary. It's on his website. He shared it with the world. I mean, it's fantastic
Yeah, he
what
does
he
that.
does.
Yeah.
And as you can see here, we have overlap of several. So he looks at the full turn date, the halves, the quarters of that. And as you can see, 2021, we had a lot of turn dates.
Yeah.
Here in 2025, again, just right on top here before the April decline.
Right.
Almost here in 2020, again here, etc. You can see for yourself, it's been working really well. Some pullbacks are bigger than others, but in general, it means a top, not a bottom, but a top. All these ones are top indicators. This is maybe
And
one
when's the
that
next
misses
one? Next one it's due when?
is due somewhere around March, April, I believe, next year, somewhere
I'm
around
hearing a
there.
lot of that. Yeah.
Yeah.
He also is his war cycle's peaking. He thinks that
Yep.
there's going to be a war with Russia.
Oh, I hope
With
not.
The Europeans want a war. And you know what he said? I watched an interview, and I've never heard him say anything like this before. Before he said that he has a couple of months of food and water
Oh,
stashed.
okay.
He's pretty nervous about
That's
what's
nervous.
coming up.
Yeah. Hmm. Well, I do have my own little personal reserve, but that's just, since we're here in California, we have, of course, earthquakes and the likes,
Oh
and
yeah,
a
right.
very fragile electricity net that doesn't work when it starts raining. So I have a
Yeah.
backup generator wide, because our electricity jet is like a net is like a third world country, honestly. And I do have, of course, some emergency just in case. So I agree, it's not a bad idea. I don't have it for war. I'm not that pessimistic. I hope not. And so
Okay.
far,
Yeah.
our president is doing a good job, I think, in trying to extinguish most wars. But it's definitely been unsuccessful, of course, with the Ukraine-Russia uh,
Okay.
intervention.
So,
But anyway, you want to moving
how
on?
deep for this little four that we're going to get?
Yeah,
Could
so
we
we've
get
been
to 6,100 prior
No, I
record
don't
highs?
think so. So
Not
fourth
that
waves
deep.
are quite unpredictable flubber waves. Let's see if there I call them. So I was looking for ideally somewhere around 6,400,
Okay.
plus or minus 100. I think so far we got to 6,550, right? So it's
Yeah.
always approximation. It's not that it has to be that exact number, and we haven't really gotten it. We got pretty much only the October low, and that's it. So this is the big bar in October. I've been tracking it as a bounce, because normally corrections move in three waves. If we go a little bit to the left side here of the screen, you
Yeah.
can see here that big rally we had in April, and then
Yeah.
we had A, B, C lower for three waves, and then they took a couple of days, and then of course the market took off and never looked back. And
Never
it's
looked
kind of
back.
like a similar depth I was looking for. Oftentimes in the Elliott wave, wave four equals wave two. Doesn't have to be the case, but it's a rule of thumb you're going for. And we also, in general, apply a 38 to 32.3 whatever percentage retracement of this wave three here in green.
Okay.
And you
So
can already. Hmm?
four equaling two comes in lower than 6,400. It
Yeah,
comes
then you're
in.
looking at about 63.80. That would be
Okay.
picture perfect. That
I
would be
see.
fantastic. It doesn't have to
Okay.
be. Fourth waves can be also something of maybe to 6,600, and it just stays flat, because what all the market needs to do is get rid of its overbought conditions, right? It's froth. And
Hmm.
that can be done in time or in price. You either get a steep correction and everybody,
Right.
jumps ship, or it just doesn't go anywhere. And people also pretty much lose hope. They think the market is topping out and it's just basing. It's going sideways. Got rid of everybody's euphoria. Got rid of the technical overbought conditions, the internal overbought conditions, etc. And then it can move higher. And so we've been tracking this as an ABC. It can still be an ABC, but it's getting a little bit long in the tooth. The B waves can be extremely tricky. That's the problem. Fourth waves
You
are
could have
tricky.
you could have an irregular B that makes a new high, like we're doing
Exactly.
now, right?
Yes, so it's still possible. I still see the futures are doing well on the CPI. So it looks like we're going to go to new all-time highs. So then, of course, you go, okay, how are we going to interpret the current price action? So let's go back here. So this is the newsletter from October 10. So if you sign up for our services, you get a newsletter every day. About the indexes, cryptocurrencies, gold, etc., trade alerts, and every page covers a subject like the S&P 500 or the Nasdaq 100. So this was on that Friday, and we were looking for a drop to about 65.50, and I think that's what we got. That was all that we got.
Yeah.
And then we would see a bounce to about 6,700, and then another drop, and then another rally to about we were looking for about 6,700, somewhere around there, and then
Yeah.
another drop. And so the first part of last week went pretty well, right? So we got eventually here to about 67.24. And so our forecast was, I believe, for 67.25. And then the market started to decline. So you think like, oh, well, it looks like this B wave that we see here in gray had already topped, right? So we said, okay, we're going to rally, we're going to drop, we're going to rally. We got 3 out of 3 correct. So short term, doing pretty well. Short term is, of course, always the least certain. The market has, I think, on average, a chance of 53% of being green for the next day. So, it's almost a coin toss to know what the market is going to do tomorrow. You have 53% chance of it being green. Well, it has to be, of course, 53% chance because in the long term, the markets move higher. And then it started to do other things that
Yeah.
I kind of lost. Like what is it trying to do? You go like, okay, it did exactly what we thought. Rally, drop, rally, and then it started to decline, but the decline was in three waves, and then oh, this B wave is going to subdivide, and then it rallied almost all the way back here to this.
Let
Uh,
me ask you honestly, what were you thinking on that Friday when we closed with those big red candles? To me, that wasn't a buy signal on a sharp decline on a Friday afternoon.
No, for me as well. This was the start of this green wave four, and then it was just a matter of we knew it would happen, right? I said 6,800 and somewhere around there. So we were constantly in late September, early October, tracking the completion of this rally.
But
So we knew
I
it.
want to
So
know
we
what
knew it
you
was
were
coming.
thinking. I want to know what you were thinking on that close going home Friday. Boy, what a great buy right here. Were you thinking that?
Yes, for sure. I actually
Okay,
wrote that. That's what I did. I wrote that in my update. I sent it out to my members, and I can show
good for
you
you.
on Monday. I said, I hope you bought.
Okay,
And I did. And so the first 3 days of last week were great. And then things, you can only look around two corners at once, especially with the stock market, all the probabilities, right? We
right.
can't foresee everything, every single move. So this is where we are. Are we now starting to, top out here, or are we going to continue? And has the correction potentially already completed? Let me zoom out a little bit here, because I have some bar on my screen there. Again, this was an update from the 15th, and they said, so we got pretty much everything correct. We said we're going to see a rally at 66, 68, yada yada yada. So far so good, right? But then we were trying to look for lower prices, and every single time it seems like that the bears had their chance. they just
Yeah,
they just missed it completely. You were like, okay, now you have the perfect setup, right? As we saw it here last Wednesday. Okay, we've topped out. We've done three waves because B waves are three waves. We're going to now move lower. Would be picture perfect. And then every single time we had pretty much a bearish engulfing candle on the daily chart, which is bearish. It
yeah,
turned
you
out
had
to
to
be
buy it.
bullish. Yeah, you have to
Yeah,
buy it. You go,
really ironic.
yeah.
Yeah,
So that's been quite tough. So now we might be looking for a new rally, and that the fourth wave has already bottomed after just a two-day decline or 3-day decline. That we had the decline, a bounce, another decline, pretty much to the same level here on October 14th. So you had your October 10, you had your October 13, and then October 14, and that's it. And that we're now moving higher in a bit sloppy fashion as a diagonal into the high 6,000s, potentially to that 7,200 level quite quickly. And this will
okay.
be wrong, of course, if we start dropping below certain key levels. We always apply warning levels for the bears and the bulls. If it's an uptrend for the bulls, of course, and the warning levels will be raised, meaning if the price starts to drop below these warning levels, it increases the chances that that uptrend is over, right? So
Is that your invalidation level that you have there at the
yeah,
bottom of
yeah.
two?
Yeah, that's at around 65, 95, somewhere around there at
Okay,
its wave two level. Because if this is a new impulse higher, we cannot go below the start of it pretty much, which is the wave two in this
right.
case. So that's at around 65, 93, 99 to be exact. That's the invalidation level. But again, you get already earlier warning levels, right? The market gives you already earlier warning levels that you then can take into consideration for your positioning. But wanted to show this. Yes, we could forecast pretty well after the drop what would happen over the next 3 days, and then you start encountering the uncertainty in the markets on the short term. As I always say, people a lot of people want to have that short-term updates all the time on the short-term, knowing the short-term, but it's actually quite uncertain. It's better to just move out, zoom out, and look at these bigger turn dates, look at the overall general bigger picture trend, to see the forest through the trees. You actually get less certainty with more and more granular charts. If you would zoom in here to less than an hour, you get so many squiggles. And
Yeah.
since this is still an interpretive art, you're going to over-interpret all these squiggles. So zoom out and see the forest for the trees. Know that this is still a correction within a longer bull market that we still think it's going to reach probably 8,000. So that's really what we're looking for in the bigger picture, but not until most likely 2028. And it matches, in a trend perspective, it matches. You can see how this market is, literally playing ping pong with these trend lines, and that's I think what we can look forward to in the future as well. So that's where we're at. So let's see how this is going to develop every single time. Like this was on Wednesday. It looked really good here. You were like, we have a nice setup here for this B wave top. On Wednesday, the
Yeah.
market declined really nicely, and look on Thursday, right? And
Yeah.
it was every single time. So on Wednesday, I was like, okay, this is a fantastic, good setup for the bears to hit those lower levels. Maybe only as low as 65, 85. We didn't even get it, right? The Friday, Wednesday's low, that was all we got. So now we have to wonder, okay, what is going on? And zoom out again and see the forest for the trees and continue to focus on higher levels. And I think also from that perspective, so shorts and all that stuff do not really have a place yet in this market because it's in general a bull market. So we'll always be very cautious with counter trading. So it could be possible that we're now in this uptrend. I mean, the short term is still very messy. That's not ideal, but that's what we're dealt with. So that's what we have to analyze, and that's of course unfortunate, but it is what it is. So another indicator we look at here is the AD line, the cumulative AD line, and once it starts breaking out above trend lines, so we had some negative divergence going on here. In September, meaning that the market was rallying, but the underlying market strength, market breadth was declining, and it has now broken above that trend line, which is
Mhm.
often an indication that the downtrend is over. Similar here in April, we had also here, of course, very big negative divergence between December and February. The market moved higher, but the AD line moved lower, and eventually it started breaking out, and then it made a new all-time high. And every time that happens, it's a kind of like a go long signal. It's a very reliable trade signal, and every single time we're going to make a new all-time high, every single bear market prediction is relegated to the history books.
Yeah. Trash
Because we
can.
need, trash can. We need long-term negative divergence to get a bear market, just like we had this 2 months of negative divergence in the AD line to get the March-April correction, which was quite steep, but a wonderful buying opportunity.
Yeah.
And eventually then you get these breakouts above certain trend lines. And those are very good signals also to add further to one's position sizing with, of course, always the appropriate risk management.
You want to share a gold look before you
Sure. Yeah,
go?
yeah, yeah. So before I get there, we're a few more technical indicators on market breadth we're looking for. Market is actually pretty oversold. So as you can see here, it's quite
Wow.
low. So it has a
Yeah.
lot of room to rally. And that's what it's
Yeah.
been doing. So let's move the chart a little bit forward. So it has a lot of room to rally. Anyway, let's move on to gold. So we believe gold has most likely topped for a larger third wave and
Yeah.
should know about in a deeper fourth wave,
Yeah.
probably somewhere around 3,600 plus minus 100 before it's going to do a last rally. And last couple of weeks definitely surprised us in the sense of that we were looking for a around 3,800 top on a simple symmetry breakout. And gold certainly surprised us and rallied all the way to what was it, 43.81. But those are just initial targets. But we believe that this is the third wave, and it's going to top out. It probably has already topped out,
Yeah.
and we're in a correction before the final like higher. I mean, the technical indicators are of course pretty overbought. So any pullback is quite normal again to take care of those very overbought conditions. And we're going to go into a larger fourth wave. But
Okay,
four is always followed by five. We're not
that's right.
done yet.
Okay,
Same here. I think we believe for the gold miners. Let's see here. This is GDX. We believe it has stopped for a third wave, a fourth wave, and then a fifth wave. It could do still a couple of more. But yeah, also this one is extremely extended to the
yeah,
upside and needs a little breather. And that's what we're currently going through. And then we should see a little bit more upside, potentially, of course, setting up negative divergences on the technical indicators that you're going to track. But yeah, so
okay,
as you can see here, this third wave topped right at 161.8% extension. We got a high here at about 85.08, and
yeah,
161.8 is at 85.25. So I mean that's pretty darn top
yeah,
accuracy.
nice,
Yeah.
very nice.
So
So,
we expect it to correct for a while before moving higher again. Yeah.
okay, Arno, you're a very, very excellent technician
Thank
and
you.
tactician too. So, how do people get involved with you?
Several ways. You can go to our website. It's intelligentinvesting.market. It will explain everything to you on what we do and what is included. So we have, as I just showed you, a daily newsletter, and it contains everything. You just get everything, and you get exposed to everything, even if you're just only looking for maybe an S&P 500 update. It's always there, and you get exposure to everything else. It has our trade alerts for the ETFs that track all the indexes. We have Magnificent Seven, of course, the stocks trade alerts. We have crypto trade alerts. Those are our proprietary trade algorithms, which do pretty well, if I must say. And of course, there's some losing trades. And Netflix, we lost on. My system went long 2 days before the earnings, and of course got hammered. Other times it goes great, but that's just trading. So you get your whole overview of the markets pretty much. Everything is from the short term to the long term included. It's 99 per month for 50% off for the first month. And I know a lot of people like it. They really want to get this holistic approach, this complete approach to the markets. They want to be informed about everything, and that's the way to go. And you can also follow us, of course, on at Intel_invest on X. That's where we mostly post our work. Some of it, not everything. Sometimes we post a little more during the week, sometimes a little less. It depends on, just on how much time we have on our hands to do it. But it always gives you kind of a little bit of a flavor of what we do. So yeah, unfortunately, our last post was here October 16, where we showed, hey, we got all these turns correct, and hopefully we stay correct.
Yeah,
Which I literally wrote in our update, right? Hopefully our winning streak is not about to end, as we must acknowledge that B waves can become protracted and we cannot be right all the time. And that's exactly what it was. So this was on the 15th, and here we are a week later, and it became protracted, and we were not able to foresee the further squiggles that we got, the quite erratic days with up days followed by down days followed by up days, quite erratic. Like in an uptrend, it's quite steady. This has been quite erratic, but it is what it is. So there you have it. So that's the ways
good
people can
job.
get exposed. Thank you
Good,
to
yeah,
our
good
work.
job on the 6,800 from last time. And,
Hmm.
we have some live analysis with what the market's doing today, and appreciate you coming here every quarter,
Yeah, you're welcome.
Arno.
Thank you for
And,
having me. I appreciate you want me
and
still on your show. That's
yeah,
awesome.
how long have we been talking now?
Ooh, soon almost 10 years.
Oh my gosh, yeah.
Right, somewhere
We
since
have,
2018 or something,
uh,
17, 18.
yeah. Well,
Yeah,
it's your content, and
thank you.
appreciate you coming here every quarter and sharing it with us.
Yeah, you're welcome, and I hope people find it useful. Even what we just showed, that is useful for them. I know, for example, a member of mine said, I just said it's peace of mind for him more of a long-term trader, investor, peace of mind for him to know that, okay, this bull market is still going to go
Right.
on, and I can look at the warning levels, and hey, everything is still above the warning levels, and it's maybe I only need to check in once a week, something like that, or once a month, but it gives me peace of mind knowing I'm still on the right side of the trade. I can go back to bed. I don't have to worry, and
Great
that's
example.
a
That's a
great.
good
Yeah,
That's a good testimonial.
thank you.
So appreciate that, and I think I'll sleep pretty good tonight too.
Yeah, we should. We
All
should.
right,
It's
all
not the
right,
end of the
Arnold.
world.
All
Even
right.
without the east wing, it's not the end of the world.
Oh yeah, yeah. We'll see what happens with the other wing. It can't
Right.
fly. You know, the White House can't fly anymore because it's missing a wing.
Yeah,
Uh,
it's been clipped. Yeah.
uh, anyway, thank you, my trading warrior brother. Appreciate it.
You're
Our
welcome.
note,
Thank you, Dale.
our notes are sure. Look him up on X at Intel_invest and check out his work. And that's a wrap for me, everyone. Hope you had a decent week, regardless of your P&L. Have a great weekend. And remember, don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.